Hey guys, it's Michael here, and in this video I'm going to break down my current financial picture for you guys, and then I want to share with you guys my investment strategy going forward. Again, the reason why I want to share this information with you guys isn't to show off, okay? The reason is that I know a lot of you guys watching are also in a very similar financial stage as me, and so I like to call people like you Henrys, or high earners but not rich yet. And so I wanted to make a video that really dives into the thought processes when it comes to investing and growing your net worth given your financial circumstances. So if you like videos like this, please support the channel by giving this video a thumbs up and subscribe to follow along my journey. So I'm a software engineer in the Bay Area. I've been working at Amazon for 5 years now. My wife and I make a combined $400,000 in 2022. And my wife is a real estate agent, and her being a real estate agent is actually a critical piece of our investment strategy. And I'm going to show you why in just a little bit. So let's first start off with our current investment portfolio. As of today, my wife and I own 2 properties in the Bay Area. We bought property number 1 for $960,000 in December of 2021. I actually used what's called a 1031 exchange to sell a property that I bought for $227,000 and sold for $500,000, and used the profits of that sale as a down payment for property number 1. So currently it's worth around $1,190,000, and we have a loan of about $648,000, so about $550,000 of equity. Now, property 2 we bought for $900,000 in September of 2022. It's currently worth about $1,050,000, and we have a loan of about $710,000, so $340,000 of equity. For stocks and retirement accounts, we have $67,000 in my 401k, and then $48,000 in my wife's 401k, $5,000 in an HSA account, and for cash, we're sitting on about $260,000 of cash, and that's pretty much our entire financial picture. And so now that you have the full picture, I want to share with you guys our exact plan to reach financial freedom. Now, I personally don't have an end goal as of right now, besides growing my net worth as fast as possible. And one of the main reasons I love my strategy is that it's actually super simple, and it's really just comprised of 3 simple steps. The first step is buy rental real estate. I'm just going to start at the core of our strategy first. Every year, my wife and I buy as much real estate as we can comfortably afford, while also maintaining an emergency fund of about $40,000. Now, when we're looking for real estate, the first question becomes, how much can we afford to spend? And you might think, well, you have $260,000 of cash and you need a $40,000 emergency fund, so you have $220,000 to spend. But we also have a combined $890,000 of equity in our rental properties and roughly $110,000 in our 401ks. Now, I'd highly consider using the home equity or the 401k money to buy real estate, but only if it makes sense and I don't have any more cash on hand. Usually I spend that first. So with about $220,000, we could purchase about maybe $1 million worth of real estate this year. Now, the problem with buying $1 million in real estate is that you can't just buy one single family home, because with today's interest rates, your monthly payment's gonna be like $7,000 per month, and it would probably only rent for like $5,000 max. That means you'd be paying $2,000 out of pocket every month for owning this property, even after it's rented, which might be okay the first year, but doing this isn't sustainable. We wanna be able to buy real estate every year, and you can't do that if every home you purchase causes you to lose $2,000 each month. So currently my thought process is, why don't we just go buy 2 $500,000 homes instead? Because for $500,000, we might be able to collect $3,000 in rent and be able to buy in a relatively good location with good schools and quality tenants. Essentially, I'd be buying $500,000 properties that are self-sufficient, because the rent that I can collect can cover 95% of my monthly costs associated with holding that property. And doing so would mean that I can continue to buy these homes, as each home isn't really pulling that much money out of my pocket. And so another option I'm considering is turning them into midterm rentals or short-term rentals to increase the rental income for these properties. But obviously there's more work involved with doing that. I think there is a perception that the only way you make return on your investment in real estate is through cash flow, but that's just not true. If you want to understand how real estate truly makes people wealthy, then go check out my other video right here, because there's a lot more to it than just cash flow. So now that we've bought roughly $1 million worth of real estate and rented them out so that they are self-sufficient, let's move on to the next step. Step number 2 is to pay less taxes. Okay, so the hard part is over, but let's talk about my favorite part now. You might be thinking, why would you want to buy a home that just breaks even? Now, I know that doesn't normally make sense. I wouldn't suggest this to other people, but for me and my wife, we have a solid income, and so our focus isn't necessarily to build cash flow as of right now, it's to build our net worth. And so this is where real estate taxes comes into play. By buying $1 million worth of real estate and doing what's called a cost segregation study, which is basically a third-party service that you can buy, we might be able to claim about $250,000 in deductions in the first year of ownership. And we call that deduction bonus depreciation. Now, if the total rents that we collect from both of those properties is $40,000, since we're buying in the back half of the year, we're only collecting rent for half the year, then we'll have made about $40,000, but we'd have over $250,000 of deductions on our business purely because of bonus depreciation. That means that for that calendar year, our business would actually be reporting a loss of over $210,000. And that's without factoring in all the other deductions like mortgage interest deduction, property tax deduction, and insurance deduction, and of course, other repairs. Now, remember how I told you that my wife is a real estate agent? So let's circle back to that real quick, because this is where we can leverage a concept called real estate professional. And I talk about this all the time on my profile. Now, without going into much detail, this special status called real estate professional status allows us to use that $210,000 of losses from our rental property business to reduce our taxable income from our W-2 and 1099 jobs. So if I were to reduce my taxable income by $210,000, that's $400,000 down to $190,000, I'd be saving roughly $53,000 in federal income tax. So if you want to watch a more in-depth video on how the real estate professional status works and how we use it, then go watch this video right here. Now, essentially, we've saved $53,000 in federal income tax, and that's tax-free. And we also didn't pay any taxes on any of the rental income that we collected for that year. So that's $40,000 rental income. That's the power of real estate taxes. Although we spent $220,000 in cash to acquire the $1 million in real estate, we immediately get back $53,000 in the form of tax savings in the first year of ownership. And that means that you get back 24% of your initial down payment in the form of tax savings in year 1. Now, be warned, there is a concept called depreciation recapture, which is the biggest downside to taking a large deduction in the name of bonus depreciation. These tax savings that you're claiming aren't necessarily free money. If you were to sell these properties on which you claimed bonus depreciation, you'd essentially owe the IRS a good chunk of those tax savings back. So with this strategy, the name of the game is to hold forever and never pay depreciation recapture, although there are a few other exit strategies as well. And that brings us to the final step, and the step that really accelerates your net worth building, and that is reinvesting the tax savings. My wife and I are able to save close to $100,000 after taxes each year just with our current lifestyle, but remember, we also have a tax savings of $53,000. So although we spent all of our cash in 2023 this year, next year we'll have roughly another $153,000 to invest so that we can repeat step number 1 and repeat step number 2. And by reinvesting, you are essentially buying properties with tax savings that would have otherwise been going to Uncle Sam. So you can imagine why this method of investing is popular for high income earners. Those of you guys in the highest tax brackets, you guys could potentially be saving hundreds of thousands of dollars each year by investing into real estate instead of giving those dollars to Uncle Sam. And over time, you're going to be collecting quality properties in quality areas that appreciate well over time, and you'll be able to reach your net worth goals faster by doing it this way. So if you like this video, be sure to hit the thumbs up button. It really helps the channel, and subscribe if you want more videos just like this one. Consider scheduling a strategy call with me if you want to learn more. The link is in the description below. You'll also gain access to my Facebook community group for Henrys, or high earners but not rich yet. Anyways, thanks guys, and I'll see you guys in the next one. Peace out, guys.